Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because it really feels like we're approaching the finish line on this Bitcoin reaccumulation phase marked out in yellow, like the one we saw in 2020, 2016, and 2012. But unfortunately, I'm seeing so many investors throw in the towel now, even though they were super bullish in March, April, May, June, just because of how painful and boring this Bitcoin summer chop has been, even though this is very normal for Bitcoin outside of those mania years post-halving of 2021 and 2017. And I know this cycle is a little bit trickier because of the recession fears, especially with the recent labor market weakness and the recent uptick in the unemployment rate, which has signaled recession historically once it gets above its 2-year moving average. And in case that wasn't enough, we also have election uncertainty and volatility going into November, which is what we've seen for risk assets historically. And so far this year has been no different. And we have no idea if we're going to get a pro-crypto president, an anti-crypto president, and what that could mean for the asset class, what that could mean for this market cycle. But when you zoom out and look at the big picture and look at what our base case has been for months now with this normal cycle scenario, everything is starting to align very nicely for an incredible rally starting in Q4 once the Fed has begun cutting rates and the election uncertainty is behind us. And the reason I have such high conviction that the cycle isn't over is because it's very clear to me that this rally from about October of 2023 to March of 2024, when Bitcoin made a new all-time high pre-halving for the first time ever, was very clearly driven by the success and the inflows that we saw coming into the Bitcoin spot ETFs. We were waiting for spot ETFs for Bitcoin for almost 10 years since the Winklevi twins filed for them in 2013. And of course, it was rejection after rejection, delay after delay, and no one was really expecting Gary Gensler to finally approve one. We were kind of giving up hope that it was going to happen during this presidency of Biden with Gary Gensler as the SEC chair. But when we saw that BlackRock had filed and rumors really started to pick up that this thing was happening, it made sense that an asset class that waited for this for years would have an incredible rally up to and after that event because of the amount of inflows we saw. However, what we haven't seen and what Bitcoin's real investment thesis is as a money debasement hedge hasn't even gotten started yet, because the M2 money supply has been flat for almost a year and a half and hasn't made a new high since April of 2022 because of all the quantitative tightening that's been done by the Fed. So when I look at how the money supply hasn't really begun expanding like we've seen historically, and we have a leading indicator for the money supply, which is the US government debt, it kind of gives me the feeling that the best of this cycle is still ahead of us once we get all of this uncertainty behind us with the election and the Fed starts cutting rates again, and we start to see the money supply expand aggressively again, like what we saw leading up to 2020. I know 2020 was a special case because the Fed just threw $6 trillion at the economy almost all at once with stimmy checks and all that. But even if you look at the past few decades leading up to 2020 and you ignore that quick spike, we're very far from what's been the historical trend for money debasement and money supply expansion. And that's Bitcoin's entire investment case. And that's why I find it so incredible that Bitcoin is even now still trading where it is, even after we dealt with Grayscale, Mt. Gox, government selling, and all of these other catalysts that brought so much supply onto the market. But luckily, so much of that has been absorbed into the ETFs. So once we have all of this fear and uncertainty of recession and elections behind us, and we've taken care of all of that incoming supply with these ETFs being launched at a very convenient time and absorbing so much of that supply from Grayscale, governments, and Mt. Gox, once this money supply really starts to pick up steam, and based on how this is bottoming out here and starting to curl its way upward, and the fact that we've been seeing aggressive debt expansion going over the past few years or so, and how that's a leading indicator for money supply expansion as that debt gets monetized, it's very hard for me to lose sight of the big picture and start to get bearish here or tell myself that I'm going to sell here to buy back lower, when really all this is one prolonged reaccumulation phase after we got ahead of ourselves thanks to the ETFs before our next major rally higher. starting in Q4. And again, I have no idea if the low is already in and we're going to hold that and then rally into Q4, or if we're going to have a couple more shakeouts, maybe one last low put in because of some surprises that happen with economic data or some surprises that happen as we approach the election date in November. But when you zoom out and look at this market 6 months out, 12 months out, 18 months out, and what's likely going to happen with money debasement and what's going to happen with the money supply, really hard for me to not be very optimistic over the next 12 months. And this is something we've been covering for months on the channel by looking at the US dollar index and its relationship with Bitcoin. We know Bitcoin's mania phases have required prolonged devaluations in the US dollar index, and that's what's caused Bitcoin to go parabolic. But if we look at what's been happening for the past 12 months or so, the US dollar index has kind of been in a sideways trading range. And yes, Bitcoin had an incredible rally thanks to all of the ETF excitement, but we really haven't even gotten the party started yet with a prolonged devaluation of the US dollar, which is usually what sends Bitcoin flying. And of course, perhaps even more importantly for most of you, that's what usually causes the alt season that all of us remember from 2021 and 2017 for those of you that were around. And we haven't seen anything like that yet. Yes, altcoins have been performing well because they kind of followed Bitcoin to the upside when there was all of that ETF hype. But of course, they've been taking a beating ever since Bitcoin topped in March. And we're not going to see that alt season that everybody's been waiting for until we actually get that currency devaluation from the US dollar. And that's usually what sends Bitcoin soaring. And once we have Bitcoin deep into price discovery, let's say 80, 90, 100K, that's when you can expect altcoins to go crazy. But for now, we're just monitoring the US dollar index in this range. I don't think it's going to fall into the risk on level until the Fed starts easing again and starts cutting rates. And that's something we've been patiently waiting for a while now. But of course, if there's some type of black swan that causes the US dollar index to spike into the risk off area, then we're going to have to reassess. But right now, based on what we're seeing with the labor data, based on what we're seeing with inflation, it does seem like the US dollar index is on its way down. There will be bounces along the way on its way down, but I do think it's going to enter that risk on region once again because the Fed cannot keep interest rates high for that much longer because we are seeing an acceleration in the government debt expansion because of these higher rates and the government having to finance itself at higher interest rates thanks to what the Fed has done over the past few years. And when that trend reverses, I expect the US dollar index to go down aggressively, which as we know is very good for risk assets. And we already know this is a trend that isn't changing anytime soon. We know the government has already been running huge deficits, even though technically we haven't been announced to be in a recession yet, even with the labor market weakness. But when you look at the deficit over roughly the past 10 months, we're looking at $1.5 trillion. And when we look at the history of the US government deficits, we're already running crisis time deficits more than we did in 2008 or the dot-com bubble or in the 90s. We're already running these massive deficits that are only overshadowed by what was done in 2020. And we haven't even technically entered a recession yet. So just answer the question of what's going to happen if we do actually see serious signs of a recession and do see serious weakness. What's going to happen to the deficit then? What's going to happen to the debt expansion then and the money supply expansion then? And of course, that is exactly why we Bitcoin. And the great thing about this is you don't even have to take my word for it. We actually have a test case, and that's the S&P 500. You see this chart shared all over Twitter and YouTube, people saying we're in the, 100-year bubble, and how can you be bullish and buy the S&P 500 here when the chart looks like this? But of course, this leaves out a very important detail, and that's including what's happening with the national debt and of course the money supply as well. And you can see that in the different eras of monetary policy and debt expansion, the more aggressive the debt increase was, the more aggressive the slope in the rally in the S&P 500 was, because of course we priced the S&P 500 in dollars. So if we're devaluating the denominator exponentially, we would expect risk assets to get priced higher exponentially. And you see this in each and every era. Of course, it went almost vertical in post-COVID since 2020 because we saw that huge debt expansion and we saw a huge move from risk assets as well. And the best way to visualize this is by dividing the S&P 500 by the M2 money supply. And you'll notice that we aren't even as overvalued as we were in the dot-com bubble in the year 2000. So even though everybody's saying this is the biggest bubble ever, we're more overvalued than 2008, we're more overvalued than 2000. When you account for money supply and of course currency in circulation, we're not even as overvalued as even the dot-com bubble was, and we have quite a ways to go before we even hit that region. And I think dividing by the M2 money supply is a great way to visualize that. We can also divide Bitcoin by the M2 money supply. You'll immediately notice this chart looks very similar to Bitcoin's USD chart, and of course that goes back to what we mentioned earlier. The money supply has been relatively flat for the past 18 months or so, so it makes sense that the USD chart looks very similar to the Bitcoin divided by M2 money supply chart. But of course, once we actually see that money supply expansion really pick up steam, that would make the normal cycle scenario make a ton of sense to me, because once we see that curve really start to slope upwards and we start to put some new highs on the M2 money supply, we would expect risk assets like Bitcoin, like the S&P 500, to do incredibly well. And that's why we see so much correlation between risk assets and why it's all really one trade, because of course it's driven by money supply expansion and fiat currency devaluation. So we can argue about how low Bitcoin is going to go in this correction. Maybe 50K was the low. Maybe we have one or two more shakeouts between now and November. But when you look at what's happening with Fed interest rates over the next few months, the type of easing we're going to see, the type of money supply expansion we're going to see, and the fact that yes, a lot of people are concerned that rate cuts are correlated with market crashes because the Fed doesn't do anything until the market starts crashing, and that's when they decide to step in. I think it's very hard to be too attached to that mindset, because this cycle does have one very different variable, and that's the government spending we've been seeing that we did not see in 2008 and we did not see in 2000 to keep the economy afloat for longer before actually having something break in the economy and the Fed trying to react to that by cutting rates. And of course, they're not quite at their inflation target on their preferred measure of core PCE, but it is heading in the right direction. But regardless, it's going to be a very interesting few months to see what's going to happen with the election, recession fears, labor market, inflation, and of course, we continue to cover all of that on the channel. But honestly, this has been a very low stress cycle for me. It felt like we got ahead of ourselves. It feels like we've been cooling off very, very slowly over the past few months. And now that sentiment is really starting to flip bearish, I feel like we're starting to get close to our capitulation low before we can start talking about the next move higher. So for now, we'll wait and see what happens. Just keep in mind that no matter who ends up winning this election, we're likely going to continue to see money debasement. If we do enter a recession and things get worse, the only solution governments have is more monetary debasement. And of course, that's why we Bitcoin. We don't have to worry about earnings. We don't have to worry about a CEO or a key man figure, something happening to them and that impacting Bitcoin. The main driver of Bitcoin is currency debasement. And although we've enjoyed this rally thanks to the ETFs and everybody getting very excited going into Q1 of this year, I think the best is still ahead for us. But anyway, let me know what you expect. Is the cycle over? Is the top already in? Are we going to have a terrible recession that nukes everything that the market can't recover from for years to come? Obviously, that's not my base case, but I'm open to opposing ideas. But as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.